How we doing, traders on out there? Who's ready for another round of stock market movers where we give you guys the headlines and get to the expert opinions that you want to hear from? Let's go ahead. Let's dive into today's show. Excited to go ahead and get into this. Like always, guys, hit the like button as we get started so that you guys can be notified the moment that we go live. Let's go. Let's go. All right, today's topics, we're going to talk about CPI pushing the market, Inflation Reduction Act, how will it affect the EV market, Elon Musk selling some stock, Unity, Roblox, Trade Desk, Plug Power, Wynn Resorts, and Jumaya. We got a great show for you guys. Like always, we got two experts that we're going to dive on in. We got Ivana Delevieska, founder and chief investment officer of Spear Invest. And then we're going to go ahead and get into it a little bit later, talking with Octay Kavrak, CFA, product strategist at Leverage Shares. Excited to dive into that. We'll talk a little bit about what's going on if we are going to get maybe recession in Europe, but not a recession in the United States. We're all looking towards it. The questions are being asked. CPI report came out. We'll talk a little bit about that off the start. Let's dive right into it. Welcome to Stock Market Movers. I'm your host, Money Mitch. Let's dive on in.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, welcome back. How we doing out there? I hope that everybody's excited to dive into today's show. There's a lot to talk about. So if something catches your attention or for any reason, one of these headlines is more related to you out there, well, investors, that's what I want to hear from. So let us know in the chat if something caught your eye or maybe it's just something that you weren't expecting. Let me know because we'll go ahead and take more time on that topic because what we're here for is to keep you guys in the informational edge. Let's dive into the first topic today. Of course, we're going to talk about CPI. So CPI report came on out. And of course, the reaction immediately was towards the upside. We got a quick little bounce there in the SPY. And I'm going to go ahead and kind of point this out. We're going to take a look here how we're doing in the overall market. I just want to do it full screen here. There we are. Now we can take a look here at the CPI reaction. We got that first pop, right? Now we've been kind of going sideways since then. We really haven't continued the up action. It's just been sideways from the reaction. What were the exact numbers that we got? I think the important thing is not only looking at what the estimate was here, but look also to the prior month also. I think that that was an important part. CPI year over year coming in here at 8.5 versus 8.7 estimate. Prior was 9.1. And so I was wondering if it came in line, what would happen? It seems to me like 8.5, 8.7, that's kind of in line here. And so in line actually got us to go up, which was an interesting outlook there. We weren't expecting that to get that kind of lift here. I do see that I'm having a little bit of network issues. Let me know if I start chopping up here in the chat so I can slow down for a second. But let's keep going here. The month over month number was very important. Why? Because this is the core CPI number. When we look at the core CPI, of course, that excludes food and energy. And this is really where you see it coming on down here. So look at the prior 0.7, right? That was in July and June. And now you're getting that July number to show up as what? At 0.3. This is very important because it went from 0.7 to 0.3. Now there I see a big difference. That shows me right there that excluding food and energy, inflation is coming on down. Now what showed up in the results here to keep us at the 8.5, close to that 8.7 and not getting back to, let's say, maybe 8.0? Well, it was really all about shelter cost here. If you don't know, shelter costs makes up about 1/3 of the CPI weighting. And so if you take a look, and you guys can always watch this, one of the things that I recommend is not always, just taking a look at where, the media tells you to take a look at, but looking at the actual US Bureau of Labor Statistics so that you guys can actually pull the report. I'm going to throw it up in the chat here so you guys can take a look at this report if you'd like. I dove into it, and as I dove into it more and more, what did I see was that exact thing, that gasoline offsetting the huge drop off in energy offset. Because why? Because shelter and food costs increasing. Shelter costs, which make up that 1/3, rose 5.7% in the past 12 months. And so what are we seeing here? Sticky rent prices. This is what's keeping the inflation high and probably going to stick around, right? And this is actually kind of more of a laggard effect showing up in the shelter of the inflation. So that could keep our number a little bit higher, especially if we get another spike in oil. But if we stay down in oil, that's going to also help out here, because we could potentially see some destruction, some demand destruction, maybe in the renting and housing, that could turn around that shelter cost. But for right now, that's what kept us up. So you guys got to keep watching that. If you take a look, of course, you'll hear more and more mentions of that. Take a look at the actual release. And as you dive deeper and deeper, you're going to see that, yes, it was that affected the most, was seeing that increase in food and shelter is what kept the number higher than what we expected. All right, let's get out of the CPI talk. Of course, this ran into more Fed talk, and I think that that's what you needed to watch out for. Was the Fed going to speak up and kind of talk after the CPI data? And that's exactly what happened here. I talked about this on Pre-Market Prep. If you guys don't watch that show, that's our pre-market show that talks about all the action going into the market open. Now, the Fed talk out there, Fed Evans said that he was optimistic, forecasting that next year's core PCE inflation would be closer towards 2.5. Of course, that's what we want to hear. They're trying to get it back down to 2%, right? Fed Evans said employment so strong, a sign of a still strong economy. He said that he's optimistic about the economy will continue to grow in the second half. Evans did say that he expects economic growth next year to be 1.5 to 2%. He also said that we're in a good place on rates and could pivot to be more restrictive if needed, or not raise rates as much, and also says that we're well positioned for the turns in data over the next couple of months. This is what I say you got to keep on watch. What will come out of the Fed because of this? Of course, does this leave them room to keep hiking those rates? Will we get another 75 basis points in September? I think that's what everyone's going to be watching. And don't forget, we will also get another CPI reading right before that September interest rate meeting, that FOMC meeting. So that's something that I will keep watch to see if for any reason we see a spike back in inflation. All right, we'll get out of the inflation talk on the CPI data. Everyone was watching that. Let's take a look how the market's reacting right now. Just recently, Pelosi is wrapping up. Let me see if she already wrapped it up on. She's still speaking there. She's taking some questions. Speaker Pelosi holding a press conference on her meeting and her trip to Taiwan. So keep that one on your radar. We'll see what happens there. But right now, she could be, at least testing the market a little bit here, talking about the Taiwan and China situation. I say don't rock the beast, right? We don't want the troll that is China to start really ramping on up here. I would leave this alone, but that's Nancy Pelosi for you. She's going to keep going on about it. She wants to be in the forefront and definitely showing up in the forefront today. But let's move on from there. Now, one thing I do want to take a look at is when we're going to skip Elon for right now. We're going to get into one thing that I think was important is the Inflation Reduction Act and how that will affect, of course, the EV vehicles, because I think this is important to kind of keep on watch. there's a couple of different sides here. So I want you guys in the chat to try to let me know what side are you on, right? And so the question really here is more along, have they gone too far with the certain rules that they placed in the Inflation Reduction Act bill? Now, of course, this comes from the new guidelines arguing that pricing and sourcing rules are battling here for the crucial raw materials used in batteries of vehicles. They're pretty much really aggressive. What happened here? They only want to give the credits if the batteries are being made here, if the materials are being made here in these EVs. Before, it just was enough to say that the vehicles here were being, produced here, not that the materials were produced here, but that the vehicles, just to get them to qualify for those credits. Now the battle is on because the supporters of the new rules would say that this would actually wean the auto industry off from the reliance of foreign countries and materials and encourage domestic production of those electric vehicles and batteries. So that's the goal of the Biden administration and why the Democrats went about it like this in the Inflation Reduction Act. But I throw the question to you guys out there. Did they go too far by just specifically stating that the materials for the batteries and the different materials used for the EV should also be produced right here in the United States? I'll leave that up for you guys to determine, but it's something that definitely caught my eye. And I think that as you guys see this story develop, something that you guys should keep on watch because it's going to affect all the EV market. All right, let's continue going. We'll see what happens there. Let's take a look here. Next one up, of course, we'll talk a little bit about Elon Musk selling some of his shares. He sold some of his Tesla worth about $6.88 billion. Of course, let's take a look how it traded after that. It popped on the CPI data, but then just gave it right back, rejecting that 892 level multiple times, coming right back down. We'll see if it gets back above 900 today. But what was this for, and why did Elon sell? Well, recently when asked the question, Elon replied, yes, in the hopefully unlikely event that Twitter forces the deal to close, some equity partners don't come through, it's important to avoid an emergency sale of Tesla stock. So one thing that I will note here is that I kind of agree with him. We wouldn't want to see him doing an emergency sale of Tesla stock. So that is saving the stock a little bit for some further downside if he would just come out that he, is forced to get Twitter and then has to sell all his, well, not all of it, but has to sell a big portion of that to go ahead and cover that purchase. Well, here he's coming in a little bit earlier and definitely trying to get some of that money to see what happens in the Twitter situation. I think this is something that we keep on watch and see how it develops and also see how, Twitter moves off of this, right? So you can see Twitter today, it actually popped with the CPI and was kind of just going sideways off of this news. It really wasn't moving. And one thing I'm kind of keeping an eye on is the arbitrage situation. When it went down there to 35, was actually pretty nice. Now it looks like a lot of people are kind of more weighing in for the upside arbitrage here, as more than likely Elon probably gets stuck with Twitter, but we'll see if his lawyers are able to turn around that purchase. All right, let's get out of the Elon Musk situation. We'll see what happens on Twitter. I've been talking about how I've been seeing this one, and it's been trying to just stair step its way back towards 50. It could just continue going there, but look at Tesla. Tesla to me is more along just setting up here for about a 50% retracement move, and the 50% retracement puts it back down to 810. And so yesterday we saw a low there. I got 817s. I think it could come back down there on Tesla. Let's just keep on watch to see what happens here. If we come back down through the 840s, I could see us coming back down there. But right now it's kind of in a sideways period here, and we'll see how it digests. Of course, I think this will depend on the overall market also. All right, let's get out of the Tesla talk. We'll keep watch. We'll get into our earnings talk coming on up. We still got Unity, Roblox, Trade Desk to talk about, Plug Power, Wind Resorts, and one that I was able to capture some upside move, which was Jemaya Technologies today. We'll talk a little bit about that coming on up. Now let's go ahead and get into our first interview today. We're going to play a quick trailer and dive into it right after this.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's go ahead. Let's bring back on here. You guys have seen her before. Let's go ahead. Ivana Delevieska, founder and chief investment officer at SPRX. Welcome back on, Ivana.
Thanks for having me.
Excited to talk tech with you like always. I know that's one thing that you keep a close eye on. First thing first, I have to hear about your reaction to the CPI data and, of course, the reaction of the market. What do you think happened here, and what do you think is going to happen next?
So the reaction to the CPI data, obviously, it's pretty positive. It came out lower than expectations, which is a big deal for the Fed action coming forward. We believe actually the Fed tone changed significantly at the end of July and set up for the future much more favorably for the tech sector. And specifically, the Fed calling the current environment neutral removed the risk of rates going to 4 or 5%. Like the 10-year at 4 or 5% would be pretty negative for technology, but 2.5 to 3, that's already priced in a lot of the stocks. So the setup is really favorable from valuation perspective. Earnings are coming in pretty light, I would say, but the move in interest rates overpowers the downside move in earnings. So that's why you're seeing a lot of weak earnings getting bought here.
Definitely, and we've seen a lot of action recently, of course, in tech. We saw the pre-warning from Micron. We saw NVIDIA with the pre-announcement. Now, how do you feel about some of these tech plays after getting some of those pre-warnings in Micron and that pre-announcement?
So we feel great about them, actually. And even the guys that reported strong numbers, even those came in a little light of what they would usually report. So the hyperscalers all reported cloud spending growth above 30%. That's pretty positive, but it's few hundred basis points below what they've been reporting previously. So the comps are setting actually up pretty favorably going into next year. And some companies are noting weakness in small business spending, which is actually good because if they can keep up the results to be pretty strong just by driving earnings from the larger enterprises, when the market turns around, earnings will be that much better next year.
All right, now let's go ahead and take a look at maybe some of the top 10 holdings. How do you feel about maybe let's go into CrowdStrike and Palo Alto, these kind of names, the cybersecurity. How do you feel about these?
So we feel great about cybersecurity. The comps are getting a little tougher, so we're not at full size just yet. We would hope to see some better entry points here. We're basically like at a high level or a simple level. We're trying to transition from stocks that have been outperforming over the past year and are maybe flat to slightly down on the year to stocks that are down 70-80%, right? So we have a lot of companies that have really sold off, and it's a pretty difficult exercise because a lot of the ones that are down 70%, there is reasons for them to be down. So it's really difficult to find the few where actually fundamentals may not be as bad. And the cloud team is pretty powerful, we believe. E-commerce could be interesting, right? We feel like things are maybe horrible right now, but comps are going to get easier going forward. Gaming is another area where we feel like things are pretty bad. NVIDIA had pretty horrible results in gaming. Roblox today, not great results. But once that all gets priced in, gaming is a pretty strong end market, and it's relatively recession proof. So the reason why you're seeing the slowdown right now is more the difficult COVID comps rather than actually the recession hitting in this stock. So a lot of interesting themes in industrial technology. We think that this is really the place to be as the market recovers and as technology recovers, because the fundamentals, unlike consumer tech, where we see actual competition coming in and low differentiation, like in streaming, in advertising, industrial technology, cloud spending, cybersecurity, all of those trends have actually just accelerated through this downturn.
Now, one of your biggest positions just got a kind of a little bit of a shakeup catalyst there for a second there. Unity Software, right? And so they got, of course, that proposal, but Iron Source has been already slated here to kind of get that combination here. How did you feel about that acquisition proposal from AppLovin? Do you feel that still Iron Source is the better kind of combination here?
Well, to be honest with you, we were pretty skeptical about the deal when it got announced, but then the stock this is the Iron Source deal. The stock got hit. So that was an opportunity to add, because if you looked at it, both Iron Source lost so much value and Unity lost so much value that it actually made the deal a no-brainer. Because at the beginning, it was announced at a huge premium, and then with the Unity stock price declining in the teens, the premium was much more realistic. So if you look at the strategic value of these deals, it's pretty solid. I don't know about ultimately the synergies that each deal is proposing. I don't know if those are going to end up being realistic, but it's a sound value proposition, and it's probably not a bad timing to be consolidating the space, given that a lot of stocks are coming under pressure. So I don't think the AppLovin value offered to shareholders will look attractive. Here, I think long-term shareholders would probably stick to the prior deal better. But honestly, I think management should really focus on execution and making sure that they earn the right to be doing deals.
Yeah, excellent. It's something that I will keep on watching. Unity has been getting off the bottom there. Not a bad stock to have into the ETF. Of course, you guys were talking about the SPRX Alpha ETF. Check it on out, SPRX. So you guys can follow along also. Now, let's go back towards my question here. Now, one thing that I'll ask you is, there a certain sector that really we're starting to get to that point where we should be either dipping our toes, or is this still kind of cash king times?
You mean industrial technology?
What I mean overall, right now at this moment, I'm starting to see, of course, CPI coming in. I'm starting to see some of the wall of the worry being climbed out. And I'm starting to see investors feeling like they missed out. Is there a certain sector or area that you feel that there's still some time to go ahead and start kind of working into it? And I think, of course, that would probably be into some tech names, but if there's a certain area in tech, is it some software names, or do you feel that it's more in the solar? I know solar has been getting a big raise because of the Reduction Act. What do you think here?
So we love the setup for enterprise software. Those companies have really solid fundamentals, and the stocks are down 40, 50+%. We think it's really not priced in. And if you see, the moves from the lows have been pretty aggressive to the upside. But then if you step back and look where the stocks are trading, they're still trading 70% below their peak. So it's maybe not the best entry point to be adding today. But if you step back and you're a long-term investor, these levels will be pretty attractive.
Well, we'll definitely have to keep watch on the technology names. I have been seeing Micron come back, and it's almost, did we get it? Almost there, almost the complete fill of the gap. So I've been watching that one, of course, even with a 2 times giving us the warning, still almost making back some of those losses. So I know that you'll be watching these. We'll have you back on, Ivana, especially to take a look at some of these tech names. Appreciate you coming back.
Thanks for having me.
All right, that's going to do it for our first interview. Let's go ahead and then keep going here. I know that I just talked about some Unity, so might as well cover some of these earnings that we just got. Let's get into Unity. It's been one of the ones that I'm telling you guys, I've been kicking myself a little bit there. And a lot of this is on Unity because you guys can see my little circles drawn here. I've been drawing these kind of circles here. I usually do it with what I call is the rule of three, right? So I'm looking for 3 attempts to break a major support, then some reversal action. And you can see it here. Off the 35 area, Unity has just been really strong. Every time it comes back towards that area, you see a nice bounce. Now it's really starting to get strong, filled in the whole gap here. Now we're back on up there. 50 is looking good here, holding. Also, I see kind of a nice curl on my moving averages, showing us that we're, really starting to get some momentum here in Unity. It's one that I will keep on watch. It's definitely a metaverse type of play. And you can see it here. Even when it pulled back, it didn't pull back significantly. And we did get that pop yesterday, but we're already clearing that pop now. We're up there towards 55.73. And also just to keep in mind, this is also a Kathy favorite, right? And so keep this one on watch also, not just in SPRX ETF, but in plenty of other ETFs. And it's a favorite out there in the software. EPS came in at a loss of 18 cents, beating the loss of 21 cent estimate. Sales at 297 million, missing the 298.3 million estimate. It lowered its guidance though in Q3 to a low end of 315, high end of 335 million versus the 346.87 million. So even on the high end there, it won't reach the estimate in Q3. That's what they see right now. Of course, this lowers the bar for them to eventually come back and beat the results. If they can beat the results, it'll help them out by lowering that bar. We'll see what happens here in Unity. If this is just the bottom and we're missing out on some great opportunities. Just to kind of mention about the situation with Unity and Iron Source and AppLovin. Iron Source did state in their earnings statements, and if you don't know Iron Source, that's ticker IS. They're supposed to be combining with Unity, and they stated in their earnings statement that Unity received a non-binding hostile acquisition proposal from AppLovin, and that they firmly believe that their proposed deal with Unity is clearly superior and would deliver greater value for Unity and its Iron Source shareholders. So keep that one on watch. We'll see what happens on Unity in that situation with AppLovin. AppLovin, you can see today, it actually was going down. It capped down here and then just started making its way back, almost back towards when it announced that proposal. All right, let's go to Roblox here. That's the next one up, RBLX. Let's take a look at this one. Even though it came down in the pre-market significantly, almost making it all the way back there towards 47.25. Roblox EPS coming in here at a loss of 30 cents, missing the loss of 21 cent estimate. Sales at 591.2 million, missing the 645 million estimate. So big miss on the sales there. Their daily active users were at 52.2 million, up 21%. Where they came down is their bookings. Their bookings were down 4% year over year, and that dragged the stock down. But as you can see, they shook it off here with the CPI report and started bringing it back up. All right, it looks like we got some other traders joining us around the world. Let's go ahead. If you're new to this show, do me a favor, guys. Let's take 1 second here as I get through all these headlines to hit the like button. Support us as we support you guys, going through all the headlines and getting to the expert opinions that you guys want to hear from to stay in the informational edge. Let's keep going here. Next ticker on up. Let's go towards out of Roblox. Let's go to the trade desk. Let's go to here. TTD. This is one that I was calling out in the near the close yesterday. Why? Well, if you watched at the close, we were looking at Pubmatic. Pubmatic had a nice move yesterday, big push on up. It was up about 17 to 18% near the close, and we knew Trade Desk was going to report after the close. That gave me the insight that I was leaning a little bit more on the bullish side here for Trade Desk. And look at that push. It pushed right out the after hours, 17%, and then it held. And today's market continued that push on up there. And with this one, I said, keep your eyes on another one to see if you got some of the sympathy play, which was MDNI, and not a bad little move on up there, even though this one didn't have the good earnings that also came out yesterday. So let's take a look at those TTD earnings. EPS at 20 cents in line, sales at 377 million, beating the 364.87 million estimate. Now, this is where they really kicked it out the waters. They said they saw Q3 sales at 385 million versus the 382.58 million estimate. And they saw 385 million plus. So they didn't give it anything on the high end there, but they saw that on the low end, they definitely probably get towards that 385. And that's higher than the estimate there. So raising the guidance for the sales there. And now you're seeing it up there towards 75. We'll see if it can continue rising. And how did Pubmatic do today? Looks like it's going on up, just sideways, still holding that. So just keep these on watch. Of course, these are online advertisers in programmatic advertising, one of my favorite areas in 2020 that eventually got really big and then came back down. A lot of this has to do with the iOS data sharing. They're trying to find their way. I'll tell you that. And something that we need to keep watching is how the leader like Trade Desk develops. And you can see the leader doing really well here in the industry. All right, let's get out of the Trade Desk. Let's go towards the next one, which is Plug Power. If you guys have Plug Power or you like maybe FSIL, did you guys catch those moves today? They were interesting for sure. Love the light graphic. Hey, that's what it's all about, Jonathan, trying to have some fun here. All right, let's go towards that. Let's get into now Plug Power. Of course, you guys know this one. This one's a retail favorite. Look at that liftoff today. Nice little push there. Went towards 29 there. Really good move here in Plug Power. EPS coming in at a loss of 30 cents, down from a loss of 18 cents year over year. Sales at 151.3 million, missing the 164.76 million estimate. But they did reaffirm full year 2022 guidance. So that reaffirm gave a little bit of more confidence. And then, of course, when you started seeing some of the kind of solar stocks getting some lift, these ESG plays getting some lift. I also saw FSIL getting some lift. They're all kind of moving hand in hand. Plug and FSIL kind of move hand in hand. So I'm going to keep watching these. These have been slowly getting on up there. Now it has 30 in the reach. We'll see if it gets there in the next couple of days. But FSIL also trying to make its way back. Just pushed through that 450. Doesn't look too bad either. So keep these ones on your radar. We'll see what happens in Plug Power and FSIL. All right, getting out of that one. What's going on, chat? Any of these stocks catch your radar? Did you guys catch any of these moves? Let me know in the chat if you did. All right, let's continue going. Now, another one that I've been watching, and this one's an interesting one, is Wynn Resorts. Of course, if you don't know about Wynn Resorts, they sold off their betting, their sports betting, and that's not a part of this stock anymore. I think this is why you've been seeing the stock just be weak and not give a single move back up towards the upside. I'm going to point to this Wynn's chart is why I think Las Vegas Sands continues on the downside here going further. But let's go back to Wynn here. EPS coming in at a loss of 82 cents. So loss of 82 cents, beating the loss of $1.01 estimate. Sales at 908.8 million, missing the 980.85 million estimate. Wynn Resorts falls continuing on weakness of Macau, leading to revenue miss. And that's why I think Las Vegas Sands comes down, because of the Macau exposure. Of course, Las Vegas Sands is no longer in Las Vegas, only in Macau. And Wynn Resorts took away some of their sports betting. So that's why I don't see too much of the upside. But you can see it's holding on today. It's trying to hold on here. I think it needs to get back to 67 real quick, because if not, it'll probably go back to testing the 63s. All right, let's see what's in the chat. What do you guys think about Wynn? All right, looks like a lot of people are kind of mentioning certain stocks that are strong out there. EVgo is cranking today. I will give you that. Look at that. Nice little move on up there. Good call out there, JRP. Not a bad one to talk about. And with EVgo, keep your eyes on the relationship of charge point. This is another one that I think is getting going. A lot of this based on the similar play in EVgo. All right, let's continue in on there. MJ sector, I'll take a quick run through. Let's see. Tilray, not bad. CDC continuing. Nothing big here. I don't know if you guys got one that's making a big move. I've been taking a look at these. It hasn't been massive, but they're holding on a little bit, the cannabis stocks. Casinos selling off their bread and butter gambling. Yeah, honestly, I don't think that's a smart move, Zen Bullish, but I do think it's a smart move if you think that your sports betting could do better away from the casino stock. So a perfect example to me would be MGM. MGM bets, if that would be away from MGM, I'd be long it right now. But other than that, I don't think it's the sexiest name here. But I do like MGM bets. I think it's the best betting platform that there is out there. And that's just from personal experience, just to kind of give you guys why I think it's better. I just think it has the better promotions and the better platform. All right, let's go in here. Let's go to the next one, the one that I was able to capture today, at least some of the profits in this one. Jumia, if you guys don't know, this is kind of the Amazon of Africa, and it wasn't a bad trade on this one. Let's talk a little bit about this. Q2 sales, 57.3 million, up from 40.24 million year over year. So they're making more money, at least on their sales times. I wanted to take a look at their EPS right quick. Let me just pull that up right here. I just use my Benzinga Pro, go towards the calendar. Calendar will go ahead and let me know here. Did we get the EPS here? Just trying to make sure here. Jumia earnings. Yeah, I got 67 cents. It's a loss, so it's still moving in the wrong direction, the EPS, but the revenue is not looking too bad. Finally, a beat on revenue. They've only beat once in the past, so this shows me that it's heading in the right direction. Let's take a look at the daily chart. Daily chart had it popping on up there. There's some big resistance around the 810 level, but I was watching this pullback here around the 757. I got in just slightly above here in the 760s. Rode that up there towards the $8, selling some at 803, selling some at 804, and selling some into the 785. It wasn't a bad trade there in Jumia. I made my profits. I'm fully out, but we'll see what happens there in Jumia if it can continue going on up after these earnings. This is one that I would say keep your eyes on it. One of the things that I would say is look how the volume came in near the bottom and has really started to push. And now with their earnings, you're getting even more volume coming into that. It's not a bad one to keep on watch. I will be watching it the next couple of days to see if I can just rinse, repeat this type of stock towards the upside. All right, what are you guys seeing out there? MGM, more bonuses? Yes, that's for sure. More bonuses, but better bonuses. I think really there's a lot of bonuses out there that are kind of more just traps. I think MGM has the better move there. We'll see what happens in Jumia. Let's go towards the overall market. What was hot and what was not? We got through our earnings. Now we're up there towards 419. Can we get into the 420s today in the overall market? Basic materials leading us up today. Aluminum really strong. Copper having a day. If we're looking at aluminum, stocks that I like are AA. Of course, Alcoa, a nice little VWAP bounce trade here on the 5-minute. You can see it come up, bounces right off the VWAP, then comes right on up there. CENX, also one that I like trading when I see aluminum moving on up. And look how this one just held the trend. That's why I like trading CENX. I've seen it before, hold patterns, and those are the ones that I like, especially if I see consistently when they move, they like to hold their pattern. Copper, not a bad day there. Specialty chemicals leading on up. You guys can watch some of these. Danamir getting some nice push. Danamir Scientific, but you could also watch some lithium players. LAC setting up for a nice little move back on up. MP, I'm looking at it. It's going to start getting some lift. If you want some ETF action, look at LIT. Look how that just went straight up today. That's not a bad one to keep watch. Stocks like QS up on that. LTHM. ALB, this one's an absolute monster, trying to come back and take out the highs. This is definitely one that's in play now. 250 holds on pullback. It won't look too bad for me. on this ALB. I'll be looking for some pullbacks towards that 250, but it is starting to push. Could be up at 300 in the next couple of months. We'll see what happens there on ALB. All right, financial services also having a good time today. Banks and global asset management, like, of course, BlackRock and Blackstone, having a good day today. Banks here not having a bad day either. You look at Bank of America, nice little push off the consolidation area. It just trapped when it came right back down here, came back below for a second there towards 33.40s, and it's right back up there towards 35. JPM, of course, getting some lift also. So this is interesting to watch these banks actually getting some continued strength into the upside. I always kind of ruin the bank trade. So to each his own. If you guys like these banks, I'm going to stay away from them right now because it's a tough trade sometimes. I sometimes get stopped out early on in these banks. They like to gap a lot. So you can see it here on JP Morgan. You see how there's a lot of down gaps, then comes back down, then it up gaps. That's what usually ends up getting me stopped out in JP Morgan. I don't give myself enough room on the volatility. So we'll see what happens there on some of these banks. Will the financial services continue to push back, especially if we're going to keep watching what happens in the Fed? Is the worry of recession going away? And that's why the financial services are going up. That's what I think investors are asking themselves today. All right, I see a lot of mentions in the chat. In a second, we're beginning getting into our second interview. That's at 1:45. A lot of people talking about different stocks there. NVIDIA near resistance again today. NVIDIA got off the ground there, not looking too bad. I was wondering, I talked about this one in pre-market prep. Would the CPI data coming out just change completely the tune in technology? And I think NVIDIA tells me that yes. Even though, pre-announcement got hit hard, look at NVIDIA. It's closing it up. It might eventually close up the gap right back up there. And so let's keep on watch stocks like NVIDIA and Micron. Look at Micron almost filling up the gap completely. I've been watching this one to see if it'd fill it on up. I called it out earlier in the day, was looking for it to see if it would get on up there, especially with the CPI number. You're getting such a negative outlook. Next thing you know, you get some positive in the overall market. It carries it on back up. It doesn't even need to be really on Micron. It could just be the overall technology sector getting that lift. You can see it here on how the technology sector looks today. Look how this looks very similar to that Micron chart. That's why I watch the sectors. That's why I watch rotation. And that's why I'm always working backwards than forward. I'm looking at the sectors out there. And then I'm looking into each industries like semiconductors, and look how those look similar. And that's what matters. MU and that one, look how similar they look here. Very similar. And that's why it's important to kind of stay with the rotation, kind of keep up with it, and know that you have to be flexible as a trader, especially a day trader out there. You're going to see swings all the time in these types of stocks. Even if they put in a negative catalyst, next thing you know, it's going up. So we've talked about it earlier in this week. Logic is something that everyone tries to put into the market, but doesn't always the market come back logically. And so I think that there's certain times you just need to ask yourself, what is the market environment we're in? And has anything changed there? Because when things flip there, that's how you can easily see a stock like Micron put a huge negative catalyst in. But what happened there? Macro situations happened here, and that carrying the stock back. Does it mean it's going to continue ripping back? No, that's not the outlook that we're talking about. But that does help fill that gap back up. All right, let's go ahead. Let's get out of what was hot and what was not. We're going to get into our second interview today. I'm excited to go ahead and dive into this next one. Let's put a trailer here and we'll be right back. Guys, if you haven't done so before, check out Benzinga Pro so that you guys can get the headlines the moment they hit the tape. There's too many traders out there that miss headlines. That's why I recommend Benzinga Pro. Get your headlines fast, get them right to the tape. And you don't even need a credit card if you want to go ahead and do our 2-week trial. All you got to do is go to pro.benzinga.com.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, give us a like as we keep going here, and don't hit that red button on out while we're here. Let's go ahead. Let's hit the like button. Let's keep going. Let's bring on today. We got I'll walk Octay Kavec, Octay Kavec. I'm sorry about messing up your name there. CFA product strategist at Leverage Shares. Welcome to the show.
Hi, thanks for having me.
Welcome, Octave. Let's go ahead. Let's dive on in. I'm sure the CPI data, of course, you focus more on the European markets, but I'm sure you're focused also on our inflation data, CPI data hitting it. And we've had a recent rally. What do you think about the rally that we've had here in the United States with this data? Do you think that, we're just back into the bull market?
Yeah, I mean, first of all, as the saying goes, when the U.S. sneezes, the rest of the world catches a cold. So everybody pays attention to the CPI figures in the U.S. I think it was a nice surprise. Obviously, we see the market's reaction today, and it was also positive news, especially given the fact that 5 out of the last 6 estimates underestimated CPI growth. So the actuals were actually higher than expected. So this time around, we actually see some respite. We see some people that were holding more cash and dry powder finally going back into risk assets, especially equities. And that's one of the biggest reasons for the pops today.
It's definitely one thing that shook us up. I don't think we were expecting to see such a quick rip onto the upside.
Absolutely.
Now, one thing that you definitely keep a closer eye is in Europe. So the question that I have now is, do you feel that the US can avoid recession? Like the Fed has been speaking of a soft landing, yet Europe goes also into recession?
Yeah, so just going back to your last question, no, I don't think this is going to be the start of a bull market. So this is just a bull rally and a bear market in my view. Obviously, here on this side of the pond, the situation is much tougher, right? So if you look at the CPI figures, the inflation figures in the US, it basically stems from different constituents across the board. Obviously, energy is a big figure, but it's not the dominant figure. And obviously, it was one of the reasons that CPI fell this month compared to last month. Here in Europe, energy is the biggest story, right? So the conflict in Ukraine, everything that's going on, the supply chain shortages, everything is more amplified here, especially for companies that have their manufacturing facilities locally that are dependent on energy sources in order to create the outputs that they subsequently have to sell. So all of that makes the situation that much more tougher. The U.S., as we know, they're in a technical recession, back-to-back months of GDP declines. But, it's not an official, obviously, definition according to what the NBER classifies in terms of what a recession actually entails. In Europe, yeah, it's another story. We have the same rampant inflation. But the question is, the Fed can only control one side of the equation. So that's the demand side. Here in Europe, with all of the gas shortages and the ongoing conflict with Russia and the sanctions, there's just so many different factors that people simply don't know how things are going to play out just yet.
Octay, now one of the things that I'm seeing is now that inflation's peaking, do investors start dipping their toes, or do you feel maybe cash is still king?
Me personally, I do think cash is still king for the very short term, because I do think we're going to be looking at choppy markets for Q3, for Q4. But I do think these are, as good as entry points as we've had probably over the last, I don't know, maybe 4 to 5 quarters. So do you really want to give up that potential upside and try to time the market? it's not a tactic that's historically done well. So, just looking at figures over the past 15 years, if you missed the 10 days where stocks had their biggest pops, you essentially give up half of the cumulative gains that you would have had over that period. So it's a risky game to play, but I do think it is time to start maybe easing into some of the stocks that you have high convictions on, especially the ones that have some of the growth names that you think might be very well priced at these prices. Maybe even some of the FANGs. If you're looking into certain sectors, I think healthcare is an attractive sector as well. So there are a lot of things where you can sort of pick and choose in terms of entering back into the market. But yeah, it's going to be picking your entry points, and also at the same time keeping more cash on the sidelines just when you have even more conviction, knowing that it's time to really go after those long-term gains.
I'd like to ask you how you see the US dollar. Lately we've been seeing a little bit of a pullback here. How would that go ahead and affect the markets? And are you also focusing to see if we get more of the kind of the euro parity? Is that going to come back into play?
Yeah, so the euro parity, obviously that was very big news across the world. The US dollar, I don't think it was a huge surprise, in terms of how it came to be. Higher rates. Obviously, it's the safe haven currency with everything that's going on in the world. Do I think the rally can continue for the short term? Yes, but I do think the downside is much more likely at this point. We saw obviously the CPI figures easing. At this point, supply chain issues might also begin to ease. So I do think there are more headwinds for the US dollar moving forward than there are tailwinds. Let's not forget the stronger dollar creates a lot of issues for everybody around the world except developed markets. So it tends to erode the credit worthiness of a lot of developing countries. It's even bad for countries like China because they have to import a lot of the supplies in order to manufacture and then sell to countries like the US. So I'm not very bullish on the US dollar going forward. I do think there are more headwinds than tailwinds.
All right, the last question I'll ask you is about natural gas and how you feel the situation is going to play out here. It's something that definitely is on my focus. I could see it just here on the United States side last winter, how we saw that increase. Do you feel that it's just going to get out of control in Europe?
Yeah, especially when thinking about natural gas, obviously it makes headlines here every single day. We see energy prices in terms of what it's going to cost consumers to heat up their homes in the winter. It's not just in terms of how it's going to affect companies, it's about how it's going to affect households. But there are still so many uncertainties, right? So any technical indicator of where gas is going to go from here moving forward is sort of, in my view, doesn't make any sense unless you know how the situation is going to play out with the war, how Russia is going to react to all the sanctions that have already been enforced against them, and whether those are going to ease. Those are the biggest catalysts that really have to sort of play out before you can make any sort of directional bet on natural gas. But I do think commodities overall are still a strong bet for the remainder of the year. So, it was energy was the best performing sector in 2021. It was the best performing sector in 2022. And we even saw, Warren Buffett increase his stake in Occidental Petroleum to 20%. So that shows even his conviction in the energy sector overall in the world. But natural gas, I expect choppy markets, but I do think it's going to end the year on a higher note.
Octay Kavec, CFA product strategist at Leverage Shares. Thank you for joining me today. We'll keep watch to see the situation play out. And I appreciate you telling us how everything's looking, especially from across the pond. Thank you.
Thanks for having me.
All right, guys, that's going to do it for us on Stock Market Movers today. We got about 5 minutes left here. I wanted to leave a little bit of room for you guys out there to do a little ticker time. If you guys got a ticker that's moving and you don't know, just want to take a look at it, throw it up in the chat right now. Now is your chance. And of course, if you do so, give me a thumbs on up. Let's keep it going here. All right, let's take a look at the overall market. Will we get that 420 break? I've been looking at it. It hasn't broken yet, guys. Just been bouncing around those levels. We got up there to 1978. Let's see the high there, 81 on the wick. Can we get into the 420 today? I think everyone's keeping a close eye on that number to see if we can get up there. I think, now you're starting to see one thing that I would definitely just draw to attention is that we're going to get to the point where we're overbought. What is that level? And do we just continue just to push on the overbought, or do we start turning around? Remember when we were down here, we bounced. It was interesting to see if we can close above, let's say, this 417 today, it's going to be looking bullish from here, at least for the time being in my eyes. So I'm going to draw that 417, and we're going to actually pull it down a little bit further down towards exactly 417. And I'm going to draw it as my green line here. And the reason why I do that is a lot of times I don't want to be changing up my mentality too much, right? And so I'm drawing a line here, line in the sand for me. Close above, I'm a bull. Close below, it's okay to be a little bit bearish. And what this does is it leaves me room in situational thinking. That's what I think gives me an advantage and an edge than just trying to think in one way. Thinking one way doesn't really help anybody. It just creates more of a bias. So what I would do is give myself levels. If it closes up here, I'm thinking bullish. If it closes down here, I'm starting to go back into my bearish tune. Let's go ahead. Let's take some stocks from you guys in the chat, and we'll keep watching here. Apple 170 calls. 170 calls, not looking too bad. It's in play there. I've talked about this level down here, 159. We got out of that level. It's not even near the worry there. That's the worry to the downside. Just like I talked to you guys about the green line, I'll sometimes do it on a red line there. And so to me, if it broke that meant bearish. Anything above that, I'm back into the green. And so for me, Apple is looking bullish here. Could take that step up towards 170. And eventually, if it takes a step up to 170, who's not to say that it doesn't get back there towards the all-time high, at least the 52-week high here from January, which was at 182.94. It's in place still, guys, for the end of the year. Apple is not looking too bad. So if you went and you dipped buy on Apple when it was down there in the 130s, well, congrats to you. You probably caught a great move there. HRB, H&R block. I didn't expect to see this kind of move here. I need to actually take a look here. Why is this moving up so much here? All right, so I will use, of course, my Benzinga Pro to my right here. Just trying to take a look at why this is up. So it looks like they boosted their dividend. They started a 1.25 billion buyback, issued strong guidance, and of course, coming in with some earnings here. Not looking too bad there. Definitely some increases, and this just pushed up. They did raise their dividend by 7% to 29 cents per share and announce a buyback. Yeah, that will do it for you. That will give you some nice lift. Keep this one on your radar. We'll see if there's any other stocks moving similar to this one. I would keep watch to see what happens. Let's take a look here. You're seeing Bark up big today. You're seeing Jemiah up big today. These are all in the kind of similar area. Oh, is Jemiah taking that next step up? Ooh, it doesn't look too bad on that one today. A Blue Apron. A lot of these kind of getting some lift. So you saw some big pushing on up here. Now you can really start depending on some levels. And I think a lot of the FOMO action happened today. Some people rushing to get back into this market. Clovis getting that nice little level. Clovis Oncology getting a nice little push on up. CLVS. Nice little pattern here. It held the pattern here on the 3 minutes. If you want, you can take a look at a different chart. I like the 3 minutes chart here. Did an up move down, came down, up move 2, down move 2, up move 3. Watch it hold support. Support was held here. It tried to come back. It couldn't come back and break, and it held right back to the resistance break towards that. Now I'm looking for around 150 pullbacks to hold and for it to continue going into the daily trend. Next level on the daily would be a move up there towards 178, and then you can leave room to get towards the 2. All right, that's going to do it for me. 2 p.m. hitting now, guys. I'll get one more here. Smoke that 420. We'll see if it gets on up there or not. There's a lot of stocks going through there. I'm not going to be able to get all of them, but one thing I will give you is come on over at the close, guys. I see 300 of you guys out here. So come on over to at the close. That's going to be at 3:30, where we take a review of all the market action out there in the intraday as we go into the closing bell with Joel Alconin. I'll keep watch to see if we get to that 420, and we'll see what happens there. Like always, guys, you guys can follow along right here on Benzinga. You don't got to go anywhere. And up next, we got a great show for you on the roadmap. We're going to talk about here. We're going to talk with Carl Jones, producer of the Boondocks and the Black Dynamite TV shows, and is the founder of the Bubba Goose Ballers on the NFT game. So come check this out. That's going to be with Chris Ketchy coming on next on the roadmap. I'll see you guys also in just a little bit at 3:30 on At the Close. Hope you guys enjoyed today's show. Hit the like before you get on out of here. And like always, we're going to keep trying to get some of those money drops that we get on live trading. Keep battling. Hit the like button. Hit the subscribe if you're not subscribed. I do see some new faces here today, so I'd appreciate it if you hit that subscribe. Let's get on out of here. We'll see you guys on over. I'll keep battling. We'll see if the rocket remains in this market. Can we get through that 420? We'll see what happens there. All right, guys, I'll see you guys in a little bit. Hit the like button on your way out and go check out some roadmap action.